Hi, everybody. It's Nick Jerusalem here with the Jerusalem's Happy Home team. And we don't wanted to just take a quick moment here to kind of address one of the questions I'm hearing very often right now, which is the Seattle real estate market headed for another bubble? Now, obviously, nobody has a crystal ball, but wanted to kind of just cut through all the facts and just see if we can kind of predict where things are going. Kind of the short answer to that is no. I don't think we're on the brink of another bubble or collapse. Let's kind of take a look at why. So what we're looking at here is a graph of the Seattle real estate market over the last 31 years, showing you what the median home prices were doing up here, what the rate of appreciation was each year, and down at the bottom kind of gives you a summary of what was happening with the economy and mortgage rates. So you can see our previous peak was in July of '07 at 481,000 as the median home price. We then saw about a 5-year slide up until February 2012, where we officially reached the bottom of the market. So a couple things to point out is that this previous run up in the market was really propped up by just extremely loose lending guidelines, where literally if you had a good enough credit score, you could walk into a bank and get a $500,000 loan with zero down. They wouldn't look at your tax returns, pay stubs, or anything. And you literally just told them how much money you made. You could make up the number essentially. So as a result, the overly relaxed guidelines and too much capital being flooded allowed for this kind of rampant appreciation and kind of speculation in the market, which then when all those financing options went away, it had this 5-year decline with short sales and foreclosures kind of being the lion's share of the marketplace. To now where we're at is we've surpassed the previous peak and we're at 508. So let's see why. So a couple things is that we have very sound fundamentals driving the market right now because we have very, very tight supply and very high demand. So this kind of shows you the supply over the last 10 years in King County. So here we are today at 2016. If you look at the previous peak, we had about 14,000 homes on the market. Now, if I take a little bit more zoomed in look here, you can see that in King County, we have less than 2,500 homes for sale. So supply is the lowest it's been in 22 years. Is there anything that's going to be able to change that? Well, not really, because, here in the Northwest, we're very limited by all the mountains and trees and wetlands. So you can't run water out to the desert and build 30,000 homes. There's not a lot of people building condominiums downtown where there's more density because it can be very litigious. And so it's safer typically to build apartments or hotels. So supply is going to continue to be tight for quite some time. Also, during the downturn in the market, you had institutional investors buying up hundreds and hundreds of homes at a time to keep them as long-term rentals. And so that took about 3 or 4 million homes off the market that are being held by institutional investors. So now, supply is tight. What's going to drive demand? Well, a couple things here driving demand at the moment. This here shows you kind of interest rates here for a 30-year fixed mortgage. Historically, over the last 30 years, we're right around 4% right now, which is the lowest it's been since World War II. And then another big driver in the demand at the moment is Seattle is rapidly growing. You have over 50 tech companies have opened up satellite offices here. In the Seattle job market alone, there was 78,000 jobs added just in 2015, and reportedly still 25,000 unfilled positions, specifically in the tech sector. So tech has been a huge part of the growth. A lot of it has to do with Seattle being about half the price of the San Francisco Bay Area, and they have top talent here with Microsoft and Amazon. So you have all these tech companies from San Francisco opening satellite offices so they can steal top talent. And, their cost of living here is virtually half of what it is in some other areas. Another big kind of relatively new factor is the influx of capital coming into our market here from China. So Washington State had the second highest amount of international investment from China, second only to California. Over $28 billion was invested in U.S. real estate last year alone, just strictly from China. So Seattle, again, has kind of become one of those, kind of star cities on the West Coast, because you have San Francisco being $1,500 a foot, Vancouver is $1,300 a foot. Here in Seattle, we're about $600 to $700 a foot. And you all are seeing a lot of this kind of flight to safety as far as capital from China, just because all the economic uncertainty that's going on there. And at least here, they can buy a home, for instance, with a fee simple ownership, meaning that they own it, so they can pass it on to their kids. Whereas back in China, they can only have a 75-year land lease. So it's seen as kind of a safe harbor to park their investments. So those are some of your key demand factors right now. Tech growth, international investment from China. You have 80 million millennials that are, in that late 20, early 30 age bracket right now. They're entering the marketplace. So that's really driving the demand side, and again, supply at 22-year low. So if you're curious to find out how much home you could afford in today's market, or if you own a home currently and want to know how much it would sell for, it's probably a lot higher than you might think it's worth. Please visit us online at happyhometeam.com, and thanks for tuning in.